So today I'm gonna be doing like a whole analysis, marking my charts before market open, which is in like 15 minutes. So I'm gonna mark all that up, like break it down, and then hopefully take a trade, a winner. Because yesterday I didn't follow my rules and I took two losses. Um, but yeah, Riley Botha type video. Um, it's actually Naz and YM are actually looking cooked because of news, which actually is fucking gay. That kind of fucks up everything, but try I can figure something out. So I basically trade the volume of New York Open, so 9:30 EST, and trade breakouts of key levels, and obviously consider a lot more things like fair value gaps, liquidity, a bunch of stuff. But the main thing is like breakouts. Okay, that's what I trade at New York Open. Okay, so first thing I'm gonna want to do is find a level where if price breaks out, it would probably continue. So here, and I marked this out with the line tool, trend line I think it's called. I don't use it for like the trend lines, but you know. So yeah, I feel like this whole thing right here is unfilled. This whole candle, which was news candle, so that definitely should be filled. Um, but yeah, so that would be a good entry right there to take if it doesn't close below before or pre-market. By the way, I learned this strat from Vito Commerci and this guy called Brandon Trades. So yeah, I'm just trying to get good at it now because I know it works. I back tested years of data for it on FX Replay. But yeah, okay. So another possible thing that I can see here is if there's a 1 minute gap that could be inversed to give extra confirmation. I like to do that all the time. I don't really do like ICT or anything like that, but some concepts I do implement into whatever I do. I feel like so if I just trade the break of like a lot of touch points like uh resistance, if I just trade the break of that, my win rate is lower than if I also add extra confluences like a inverse fair value gap. So so I'm gonna be doing here probably putting that there. Um and yeah, I mean that looks pretty good. Like I normally like to put my stop at the top of the opening candle. So like if say the candle opens right here, and then it pushes down. At my entry, when I enter, my stop should be at the top of the opening candle if I'm taking shorts, obviously. Um, or like maybe if I'm entering off an inverse value that's bigger, I put at the end of that. But yeah, I'm not gonna be too greedy. Also, this is how the market moves. So I'm gonna teach you I'm gonna tell you like an actual like pro tip that's like saved me from getting edge TP by 1 point and then coming all the way back to break even. Which is don't get greedy because this is how the market makes money. So basically, you never okay. So say this is the whole gap right here. The gap ends right here at the bottom. Okay, you never want to target very bottom, or even if you're like say targeting like liquidity up here, you never want to target the top of the tick or the wick. Sorry, because sometimes it'll come like right here, miss your stop loss, and then come all the way back down. That happens. I can't even tell you how many times that's happened to me, guys. So I like to put it a bit under the body. This is kind of an extreme example because there's a huge wick, but yeah, I like to put it under the body. You don't have to get greedy. Just catch like a couple 30, 40 points, and that's it. It's better to like have a bigger chance of making profits than not making any at all or making like a couple points more. Catching a couple points more. But yeah. So top longs are actually looking cooked. Ooh, hold on. This looks like right here. And this is major liquidity. Hold up. Yeah, this is major as fuck. Yeah, bro. This is major liquidity. Is this? No, this isn't all time highs, is it? Oh, no. Um,